Advisory Council to the Indian Prime Minister has stated a growth target of 6.4% in fiscal year 2014, and your own target is at 6.2%. Do you think any numbers above 6% is just an adjustment?
Well, I think it's early in the year still to really be accurate about the forecast, but certainly 6.4 to us seems relatively high. What we've seen in the data so far in terms of industrial production, auto sales, PMI data, has all been relatively weak. So it doesn't look like there's that much momentum in the economy, so I think it'd be quite a challenge to get to a 6.4. Our estimate right now is around 6.2, but we do see pretty significant downside risks to that forecast, so it could actually come in even lower than that.
What do you think of India's gold and oil import bill, given what's happening with commodities globally?
Yeah, I certainly think in the region, India is probably the biggest beneficiary from this decline in global commodity prices that we've seen recently. Our estimates suggest that around a $10 decline in the price of a barrel of oil or a $300 decline in the price of gold per ounce, both of those would generate around 0.5% of GDP improvement in the current account deficit. And we expect this year that the gold and oil prices stay kind of where they are now, maybe increase a little bit later in the year as the global demand picks up, but certainly should be a lot less than the last fiscal year. So that will help India's current account position.
What is your view on gold and crude oil prices over the medium term?
Well, we expect that this recent weakening is actually probably being overstated. That gold and oil prices will probably rise somewhat towards the end of the year as global demand looks a little bit better, as we see a bit more dynamism in the Chinese economy. So we're guessing that by the end of the year, gold prices will be around $1,500 per ounce, and the Brent oil price will be around 110.
What is your expectation from the RBI in terms of how much more easing do you expect, and when could we see results in the investment cycle?
Well, I certainly think the RBI is in a much better position than it was last year in terms of its ability to have a little bit more headroom to loosen monetary policy. Inflation's come down. We saw the wholesale price index in March coming down below 6%, and the economy is still weak. And so I think when the RBI looks at those growth-inflation trade-off, it does see it has some scope to lower interest rates. So we expect them to lower interest rates maybe another 50 basis points before mid-year, and that will help the economy. However, in terms of its ability to turn around investment, I think that's much more of a difficult question. I think a lot of the obstacles to investment in India are really structural problems linked to land reform and land purchases, linked to ability of government to approve investment projects. And I think these things really need to be solved before you really see a decisive turnaround in investment. Lower interest rates will help, but they're only going to help on the margin.